Okay, so we just finished up the previous one, which is the LIFO. I mean, we did LIFO was the first one, second one was FIFO. Now let's see what this one's about. So this one is going to be the same information except for one key difference. This time, our costing and tracking method is going to be periodic and it's weighted average. So in this case, let's just go ahead and proceed. So what happened on June 1st?
Purchase 100 toys at $1 each. Gives you a total expense of $100 plus freight for 25 is $125.
Perfect. Good.
Its cost is $1.25.
Mm-hmm. Okay. All right. Now, again, you don't need to solve for the cost per item in this one because we know for a fact, so we're working on this problem now. We know that on June 10 and June 15, we still have purchases of inventory. So in this case, you're not obligated, but for practice purposes only, you already know that it's going to cost you $1 per each item, $1.25. Okay. So once again, what happened on June 10?
Purchase 200, add 125 a piece. Purchase expense is $300. Freight was $50. Total cost $300.
Okay. So again, once again, practice purposes only. You can just solve for it. All right, last but not least, what was the last purchase that we bought again in June? I believe it's June 15. Okay. For $1.50 each, $4.50 plus $75 freight. Okay. So once again, the key information here now that we have is that you should be ending your inventory with at least 150 items. So once again, let's go ahead and total up our totals. You should have 600 items, costing a total purchase of $800 with a freight of $150, giving you a total cost of $950. Now, what is the most crucial difference here that we need to solve for?
The weighted average,
The weighted average. So what is that going to be?
158333333.
Okay. So in order to solve that, you're going to take the total cost of $950 and you're going to divide it by the 600 items to give you what was that? $1.05.
58.
Yeah, I think is there two more decimals after that?
3333. Yeah.
Okay. So at least we know here, right, that we need to solve for our average cost per item, right? We took our total cost of $950 and we divided the whole thing by the 600 items that we have to get us a total average cost per item to be $1.583333. Okay, so $950 divided by 600, and that's what we get. Okay. So now the next step is that let's actually solve for our cost of goods sold. So if we have 150 items left, right? How many items did we sell?
450.
450. So pretty straightforward. What is my 450 multiplied by my average cost per item of 1583333? What is that? What do I get there?
I think we have to equal round this one,
Mhm.
round it up,
Mhm.
because I end up with $712 and 49 cent, 0.4985. So I'll go 712.50. Yeah.
Good. 712.50. So then if I got 712.50 to be my cost of goods sold, then therefore what should be my ending inventory?
237.50.
237.50, right? We take our 950, right? we subtract it out by the 712.50. Or if you guys want to, you can also solve for the whatever the 150 times 1.583333 is, and you're going to get $237.50. So that's going to be that. Okay. So now that we have solved for that, right, we know for a fact that the difference between this and the other two methods is doesn't matter but what batch came first. All we care about is what our total cost is in the total quantity, and we find our average cost per item. So therefore, what is the total cost of your ending balance?
A.
A. Okay. And okay, there you go. And then lastly, what is the total cost of your cost of goods sold? D. Okay. So once again, on your exam, you're subject to know how to do all three, but I will only test you on one. Okay. So there you go. Here's a perfect example of you practicing all three methods, and that's exactly what I'm going to do. So it's identical to the first exam, right? I'm only going to test you strictly on purchases and selling your items. I'm not going to test you anything about involving returns or discounts or any of that jazz, okay? Exactly like this, okay? If I had all the time in the world, I would make one entire problem, and I'm going to make it so complicated that it's the whole exam. But in this case, no. I have to spread across all the other stuff that you need to know as well. So here you go, question number 20. Let's do the conversion entry for this particular example. So this one is to answer the next three questions. So how do I journalize my conversion entry? Okay, in this case, was I specific on the items I purchased?
Toys.
Toys. So there you go. So how am I going to journalize my conversion entry?
Are we going toys inventory?
Toys or yeah, that's good.
Are we
So
doing the end of month?
yes,
Oh, okay. So
because in this case it's
June
June 30th, right? I told you one specific information. I had a total of 150 items. So in this case, it is June 30th. Okay, what are we gonna journalize?
inventory, sales.
Okay, we're not
Oh,
dealing
cost of
with
goods.
sales. Okay, good.
Cost of goods.
Inventory, and in this case, it's toys, and we're gonna also recognize cost of goods sold. Okay, what else are we gonna recognize?
Purchase expense and freight expense.
Good. Purchase expense. And we're also going to recognize our freight expense. Okay? All right. Looking at our information from the table right above. Okay. So what numbers am I going to plug in which accounts? Okay.
237.50 for inventory.
Correct, because that's our ending inventory. That's the inventory that we actually still have. So 237.50. Okay.
And 750. I mean $712. $712.50 for cost of goods sold.
Yes. Right.
Purchase expense was $800, and freight expense $150.
Excellent. So once we solved for our inventory tables, right? Our key things that we already solved for is our ending inventory, our cost of goods sold. We already know what our purchase expense is, and we tallied up our total freight expense. So in this case, pretty straightforward, pretty easy. All you need to know is where to plug in your values. And of course, you also have to make sure that at the end of the day, does it equal to the total cost of your inventory? So in this case, both sides match $9.50 on each side. Okay. Right. Any questions? So I may test you on doing a conversion entry. So therefore, maybe one of my periodic inventories could be 3 questions. Okay. I may even test you to journalize a specific transaction. So that could be 3 or 4 questions, right? I can easily ask you, journalize the sale on June 12th. Okay. And you would journalize exactly how it looks, right? You're going to know that you have to journalize the sales and however you receive the money. So in this case, you received cash, right? For each transaction, right? Now, that's just doing periodic inventory. I may ask you the same exact questions, but maybe apply it to perpetual inventory, okay? So make sure that you read the question carefully and understand what the question is asking you, okay? Am I asking you to do periodic or am I asking you to do perpetual inventory? Okay? So is everyone good up here?
Yes.
Okay. Let's move on to question number 21. Okay, so then on June 17, okay, you received 10 broken mugs and you requested for a full refund, okay, from the vendor, okay. What account will be journalized for the return if you are using periodic method inventory? Okay, so you're trying to, so this is assuming this is related to that, right? And it says right here that on June 17, you received 10 broken mugs and you're requesting for a full refund. What account would you use if you are keeping track of your inventory as periodic inventory? That's the question. So,
Maybe accounts receivable?
so what is accounts receivable? Are we selling stuff to our customers?
D.
Okay. D, inventory. No.
Wait,
Okay.
it's gonna be B.
Did you
It's
say,
gonna.
go ahead?
I said B because you're gonna credit the purchase return and allowance.
That is correct. So if you guys remember, periodic inventory, right? We've been learning that when we recognize our inventory, we automatically assume they are expenses. Purchase expense, right? And because purchase expense, right, we need to keep it intact so we can do our periodic inventory, right? In order for us to reduce it or reflect that we're reducing our purchase expense, we need to create a contra account called purchase returns and allowances, okay? So remember, the difference between that and perpetual inventory, right? When we recognize our inventory as perpetual inventory, where are we placing all of our items? Directly into inventory. Okay, so that's something that you need to make a note. So remember, read the questions carefully. I will not have the questions in order. Okay, they're gonna be out of order. So I could be testing you things on chapter 7, chapter 8, or even chapter 2 and then chapter 3. So make sure that you pay attention and know exactly what the question is asking you, because right here, even though if you think about it, we're still under the chapter 5 and 6. So right here already, I gave you one key factor here is this is periodic inventory. Okay, so therefore, B is the actual correct answer. Okay, because purchase expense is going to be debited. So therefore, in order to reduce or decrease purchase expense, you need to have your contra account, which is your purchase returns and allowances. And normally it would have a credit balance. Okay. All right. Okay, is everyone okay with this one?
Definitely have studying to do.
Yes. Okay. All All right, so then question number 22 says terms are 5%, 15, net 30. What does that mean?
A.
A.
A, take a 5% discount if you pay within 15 days. If not, pay in full within 30. That is correct, right? Okay, you're not going to get fined, right? This is an incentive, not to force your customers to pay anything. And if you don't, you get fined for it. That's not cool. I wouldn't want to be your customer if you decide to fine me for that. Okay? But however, right, in other terms, if you think about it this way, terms and interest, right, if you decide to finance your items, then yes, you can be entitled to, charge financial charges up to 5%, right, depending on what agreement you guys signed. Okay? All right. Question number 23, last but not least for this section, is going to ask you, what does net mean?
B.
B, take discount immediately. Yes, okay. Best example would be taking a look at your paycheck, right? If you have gross earnings, right, that's your total amount that you've earned. And then after you deduct all your taxes, you have what's called a net pay. Okay? So there you go, right? Net means taking the discount immediately. All right, so that was chapter 5, okay? Let's go ahead and move on to chapter 6 here, okay? So chapter 6 asks, okay, if a customer buys 10 shirts for $5 each, right, and sales tax is 8.25%, total cost of sales was for $54.12. If the next day the customer wants to return 5 of those shirts because they were the wrong size, then the customer demands a full refund for the 5 shirts. What should the journal entry look like? Okay, assume that you are using periodic inventory. Okay, so here's options A, B, C, and D. Which one looks most accurate?
I want to say A, but
Okay, remember, we're journalizing the return.
Return 5 shirts at $5 each.
Mm-hmm.
That'd be $25.
Mm-hmm.
oh, C.
Then you got tax.
Mm-hmm. Right.
206.
Good. Okay, so here we're not charging our customer more money for the 25 for the 5 shirts. Okay, so that's what A says, is that you're charging the customer an additional for five shirts. Right? So in this case, the question was asking, how would the journal look like if I am going to issue the refund to the customer? So in this case, option A and B are wrong because I'm not going to be charging my customer more money. In fact, I'm giving back their money. So C and D are pretty much our only options. Now, of course, the rules to this is you have to give back a portion of their money back that they had for the sales tax. Okay? So C is the correct answer because, once again, we recognize the sales tax that we collected as part of our sales tax that we have to pay the government. So in this case, we separated it. If we're going to have to refund the customer their money back, we got to take it away from the money that they owe us, not from the sales itself, right? Because in this case, we're including the tax. Therefore, because the original journal, we separated the tax. So therefore, we need to reissue out that tax. Okay? So C is the correct answer. Okay. Number 25. Okay, let me see if this is it. Okay, so let me push this forward. Okay. Question number 25 asks, okay, when there is a store-wide sales discount for 40% off, you can only take a discount on which of the following items?
A.
A, only the merchandising selling price. You can absolutely never ever take away tax. Okay? Tax is an obligation that you have to for running a business is that you need to pay the government. Okay? And of course shipping and handling, right? You can never take a discount off of that. You can offer free shipping if you like, but once again, you can never take a discount off of that. And last but not least, there's no such thing as none of the above because merchandising selling price is a option. Right? It's the only thing that you can actually pretty much discount. Okay. All right. Last question here for 26 is use the table down below. Okay. So if you decided to purchase an item, original price of it was $4.75. However, now the years has passed, so now the replacement cost, now the market's telling you that it is now worth $4.05. Okay, your original estimated selling price was $10.50. Right, to dispose the item, right, whether to sell it or to buy back the item, is going to cost you $1.33 per item. Now, of course, the amount of profit you want to try to get out of it is $3.55. So, how do you solve for the ceiling price?
Selling price minus disposal costs.
Mm-hmm.
So 917.
917. 917. Let's take a look. Yes, 917. Okay. So then how do we solve for the floor?
Take the ceiling price of 917 minus the profit
Mm-hmm.
and get 562.
$5.62. Okay. So then now that we have our three contributing factors, right? Or the three things that we need to compare our prices to, how do we know what the market price is?
It's the floor price, 562.
Okay, so we compare the three numbers, right? We got our ceiling price at $9.17. We got our floor price at $5.62. And last but not least, we also have our replacement cost, right, of $4.05. So let's compare and contrast because we need to make sure that whatever number falls in the middle is going to be my market value. So in this case, my middle value is $5.62, right? Because $4.05 is lower than my floor price. So in this case, my market is going to be $5.62. So therefore, let's answer the question, right? Which one is lower? At which price is lower? Cost or market?
Cost.
Okay, so the cost of $4.75 is significantly lower than $5.62. So the answer is C. Okay. Good. Make sure you guys know how to do the lower cost of market. Okay. All right. Now, coming up around the corner, we have now chapter 7. So let's see. I think we're good on time. Yes, it is 3:30. Okay, so let's tackle this one at a time. Chapter 7. Okay. First question that we have here is question number 27. Okay, your tracking method is perpetual. Okay, and then on June 1st, you made a purchase of 100 coffee mugs. Okay, for $2.35 each, and the freight cost you $100. And you purchased this on an account. How do we record this transaction?
We debit coffee mugs for the 335 and accounts payable for credit for the same amount?
Let's see. So we know that everything must go into our inventory.
Yes.
So coffee mugs, boom, okay? If we bought 100 mugs at $2.35 each, that gives us $2.35. Plus, we're going to include the freight of 100. So $3.35 is correct. Okay, sorry, Felipe, what were you saying?
No, no, no. Sorry, thinking out loud.
Okay. So in this case, because we're dealing with perpetual inventory, right? You need to know that everything goes straight to inventory. Okay? Okay, so 335. Okay? So here, we're just recognizing that we just made a purchase of inventory. Okay? All right. Number 28, okay, says that on June 7th, right? Okay, you received your coffee mugs and then you end up finding two of them were broken or cracked. Okay, so then you request a refund from your vendor. So, how do we record this transaction?
Payable.
Because we have to reduce what we owe. Okay, and this is assuming that these questions are related to each other.
Then return.
Would it be mugs?
Coffee mugs, right? Because we're on perpetual inventory, yes. So in this case, because we place everything in inventory, therefore, the only place that we can take it out from is inventory. Okay. Now, I'm returning 2 mugs. How much did the mugs cost me?
$2.35.
$235 a piece. So therefore,
$4.70.
okay, excellent. Okay, good. All right. So now, question number 28 says that on June 8th, you sold 25 coffee mugs for $10 each. If it cost you $3.37 each, right, including the freight, assume that there are no sales tax, okay, and all sales were made with cash. So first, let's break it down and recognize one transaction first. We need to record that we sold something. So therefore, what should be my first transaction here?
Cash.
Cash, right? I sold it and I'm receiving cash out of it. Okay.
And then sales.
Sales, good, right? So if each coffee mug I sold for $10 each, what is my total amount that I sold? To what?
250.
250. Yes, no sales tax. So 250. Okay. What else do we need to recognize since this is perpetual inventory?
Cost of goods.
Cost of goods sold. And what else?
Mugs.
Okay. So if it costs me $3.37 each, then therefore, what should be my total cost of goods sold?
$84.25.
Okay. So we take our 337 times 25, $84.25. Okay. Good. All right. Is everyone okay here? Now remember, this is what we just recently learned in chapter 7 and 8, right? We reviewed this. The difference between this and periodic is that we just don't have this part right here because we're not constantly updating our inventory. We're waiting to the very end to solve for this part. Okay?
I'm sorry, you said you took 337 times what?
25.
Okay.
Mm-hmm. Right? All right, so then 30, right? On June 10, a customer returns 2 of those coffee mugs for a full refund. Okay? And you sold each coffee mug for $10 each. And of course, there's no sales. And it cost you $3.37 each. Record this transaction.
Sales returned and allowances.
Because we're recognizing, right? You cannot ever take away from sales directly. It's finite. Once a transaction has happened, you cannot undo it. So in this case, we have to create a contra account called sales, returns, and allowances. Okay? And what are we giving back? How did the customers pay us?
Cash.
Cash, right?
Payable and cash.
Accounts not payable, and there's no tax. No tax. So in this case, how much of the money am I refunding?
$20.
$20. Okay. What else do I need to recognize?
Coffee mugs.
Because in this case, the person's actually returning it 100%. I'm not giving them a discount, so they are actually returning the product to me. So in this case, coffee mugs, and what else?
Cost of goods.
Yes, right? This account, we can definitely reverse. So how much am I going to be refunding if it costs me $3.37 per cup?
$6.74. Oh, 74, not 64.
I heard you. I just didn't type it in. All right. $6.74. Good. Awesome. Right? So I can ask you all of these questions, right, to journalize this, and I'll ask it obviously in the form of a multiple choice question. So just like exactly from the previous exam, right? I could say, A, I'm going to debit my accounts payable for the $4.70. Okay? So again, I would recommend you to journalize it first and then look at the answers and see which matches up those exact answers. Okay, so that's why I left you guys all that journal space for a reason, so you can practice journalizing your transactions and completing them all the way. Okay, so exhaust your space, right? Right? I made enough pages for you to be able to enter in all those transactions. Okay. All right. All right, chapter 8. Okay, so we're almost done here. So chapter 8. Now we're taking a look at the similar, if not the same exact scenario. However, our tracking and costing methods are going to be perpetual LIFO. So let's go ahead and take a dive into this. So first things first is we recognize that we have a purchase on June 1st. Okay. Now let's go ahead and discuss. So how much did I purchase?
100
Toys.
toys costing $1 each with a freight of $25.
So therefore, what's my cost per item going to be?
$125.
$1.25. Okay. All right. So that's what happened on June 1st. Okay. What else happened? on June 10?
You bought 200 at $1.25 a piece. Freight was $50. So $300 and 150. A dollar
Okay.
fifty a
Yeah.
piece.
So these things were from the previous one. So these are this part right here is identical. However, what happened on June 12th?
You sold 200 toys at $5 each. No sales tax was charged.
Good. So we sold how many items? 200 toys. Okay. So now, what method are we using?
Last in, first out.
Last in, first out. So in this case, how am I going to recognize this?
Cost of goods sold, 200.
Mm-hmm.
Cost per item, 150.
Mm-hmm.
And
300.
then the total is 300.
300. So here, I'm automatically taking out this 200. Okay. So therefore, I no longer even have this anymore since I sold this one, right? That was the last batch I purchased. And now that it's gone, I'm going to clear it out from my inventory. Okay. So then, what has happened next?
Bought 300 toys at $1.50 a piece,
Okay.
plus $75 in freight.
Okay, so 300, 150, 75 for freight,
525.
525. Okay.
175. Yeah.
Mm-hmm. All right, so then what happened next on June 20th?
We sold 250 at $5 a piece. No sales
Okay,
tax.
so we sold 250 items. Okay, so let's take a look at our batches, right? So how many batches do we have?
Two.
Two. So which one are we going to take from?
The last one, the 300.
Mm-hmm. So in this case, on June 20th, I sold 250 items. At what cost is going to be each item?
75.
175. So what's my total amount that I sold?
437.50.
Okay. So therefore, I should have a remainder of 50. Okay. At how much?
$85, $87.50.
$87.50. Okay. And then what does it say on June 30th?
You had a total of 150 toys on hand.
Okay, so let's take a look. Okay, so here I'm going to total up my totals at the bottom. So T stands for total.
For the 620, for the 250 times 175, is that 477.50 or 437.50?
I don't know. What do you guys tell me?
I got 250 times 1.75 is 437.50.
Okay, anybody else?
$437.50.
437.50. Okay, so here we got to correct this. Okay, so 437.50. Okay, so then how much should I have remaining?
No, 87.50 is correct.
Okay, so 87.50. Okay. $87.50 is correct. Okay, so now again I'm gonna add up my total. So let's solve our column. So here in grand total, how much did I actually sell?
450.
I sold a total of 450, right? At what total cost?
It's 737.5.
Good. Right? how much should I have left remaining if I have my batch of 100, which never was touched, and have a remaining of 50?
150.
And what's my total here?
$212.50.
212. Now you could go ahead and compare and contrast. Does that equal the 950? So in this case, question here is for number 31 is what is the total cost of your ending inventory?
A. Oh, sorry. B.
Okay, okay.
Oh, yeah, just quick glance. That's what I do when I take a test. Oh, I see. Yeah.
Okay, yes. That's why read very carefully, right? I could do something like this. This was 15 instead of 12, okay? Right? And then of course, last question is what is the total cost of your cost of goods sold? So once again, this is a perfect example of what I can test you for the perpetual inventory. I can ask you these two exact questions, right? What's your ending inventory and what's the cost of goods sold? So in this case, you may have to do a little calculations, but once again, I'm going to make it plain and simple, just like this. I'm going to test you plain and simple, no returns, no allowances, no sales returns, no any of that. It's going to be straightforward purchases and sales only. Okay? So that was that one. All right, is everyone okay with this one?
Yep.
All right, so then let's go ahead and do the second example, but this time my costing method is going to be moving average. Okay, because I don't think I tested you for the other one. Yeah, no, I didn't test you for the other one, right? This is the last question for chapter 8, right? Because if you could do LIFO, you could do FIFO just as easy. So in this case, I really want to make sure that we do test you on the moving average, okay? So first things first is what happened as of June 1st?
Purchase 100 toys at $1 each with a freight of 25.
At $1 each. So that's the purchase price is 100 plus $25 freight gives you 125. So here, because this is my very first one, what is technically my average cost per item?
$1.25.
It is $1.25. Assuming that you sell something in between, the only batch that you have is just that batch. So it's going to cost you $1.25. So then what happened next?
Purchase 200 toys costing 125 each.
So I believe purchase price is
125. Or no, 250. I'm sorry.
okay with 50 freight.
300.
Okay. So this is where what do you need to do? What's the next step you need to do?
You take your totals divided by quantity, and you still end up with 125.
Now, do you really?
No, we don't need to.
Okay. So if I add up my total here, right? What's 100 plus 100 plus 200?
300.
300, okay? So then what's 125 plus 300?
450 or 425.
425. So therefore, what is now my new average cost per item?
My fault. $1.41 66667.
Okay. Good. Right? All right. So that is now my average cost per item because now I have a new quantity and I have a new total cost. And I need to find the average. I need to consistently keep recalculating my average. So in this case, my new average is $1.41666667. Okay. So then what has happened on June 12th?
Sold 200 toys at $5 each.
Okay, so June 12th, if I sold 200 toys, what is my average cost per item going to be?
16667.
Okay, so I'm gonna only, there, I can only squeeze so many. So what is my total cost of goods sold?
$283.33.
Two,
83.333333.
okay, perfect. So in this case, do we round up or do we round down?
Down.
Down, good. So in this case, I need to subtract out my 200, and yeah, 200 items costing me my 283.33. So therefore, I should be left with 100 items costing me, what is it, 146.67.
I got 141.
Oh yeah, sorry, 141.67. Okay. So therefore, once again, you have to recalculate the average cost per item, and now this time, it's exactly 14167. Okay. So then, what happened next?
We bought 300 toys at $1.50 a piece, and then plus $75, which brings it to 525 total.
Okay. So therefore, I just increased my inventory once again. So now I should have a total of 400 toys at a total cost of
$666.67.
$666.67. Oh, wow. These are great numbers. All right. So then, what is going to be my new average cost per item?
$1.66665.
Okay. Okay.
I think there's one too many sixes in there.
Okay.
It should be 4 sixes.
Four, there you go. 4 sixes. 7, 5. Okay. All right. Everyone good with me so far?
Yep.
Okay. 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 So then now, what do we do now? What happened next?
Sold 250 toys.
Okay. So it is now June 20th, and we sold 250 toys at 1.6666, okay, and so on and so forth. So therefore, what is my total cost of goods sold here?
$400. 416.67.
Okay, and we're going to subtract that out to 50 minus the 416.67. So then, what should I have remaining? 150 at what total?
250.
150. Or no, 250.
Yes, 250 even. Okay. And of course, go ahead and add up your total on this side, right? If I sold a total of 450 items, at what grand total?
450.
450. Okay. What's my total cost?
$700 even.
$700 even. Okay. So now let's go ahead and solve. So what is the total cost of your ending inventory? B, 250. Okay. And then lastly, what is the total cost of your cost of goods sold?
D.
700.
700. Okay. So like I said, I can ask you all these questions. Okay. So now that is it for today's review. Okay. Okay. So tomorrow. So do you guys? Does anybody have any extra questions? So once again, this is going to be what I could ask you on the exam. So whether it's LIFO, FIFO, or moving average, this is pretty much exactly how I will do it. The numbers will be different. They're not going to be the same. Or hope they're not the same, right? So yes. Okay.